We're still looking at MayJune 2016. We've now looked at 3 questions, 2, 3, and 4. We're now going to be looking at question number 1. Posting from subsidiary journals to general ledger accounts. 25 marks, 30 minutes. There's the question. They've given you lots of balances. They've given you some journal columns. And they've given you the required. Start with the required. This is what your general ledger accounts need to look like. Okay, so date, details, and amount. Open the following ledger accounts using the opening balances given in the general ledger of N traders and post the totals of the subsidiary journals to the required ledger accounts. Fine. How many accounts do they want? They want 5. Question 1. Draw up tier accounts. What do tier accounts look like? They look like this. Debit column, credit column. Okay, you would have to draw these 5 accounts in your exam. What's the first one? Sales, purchases, bank. So we've got sales, we've got purchases, we need bank. That was C. What else do they want? Debtors control, creditors control. And that's it. Okay, too many of these. Delete that last one. Okay, there you go. This was D. This was E. Alright, that's what I would do in my script. Okay, I'll leave lots of lines in between in case I need to do lots of workings and posting and all of that. Okay, but that's what I'm going to start off with. Okay, so now we need to go to the question and we need to read and take figures through to our answer sheet. Question 1 is asking you to post to the general ledger. The question, the funding information for the month ended 31st. Okay, June of Nana is a registered VAT vendor, uses periodic. VAT is included where applicable at 14%. 1st of June 2015, the following balances appeared. Right, so these are easy marks, just for knowing what the account is. Sales is what type of account? Income. Income will have a balance on the credit side. 1, what month? June. Balance brought down 328000. Purchases, what type of account? Expense 174. Balance brought down. Next, bank favorable. If it's favorable, it's an asset. It'll have a debit balance, 66300. Creditors control is a liability. Liabilities have credit balances, 215. Creditors control. Yeah, that came first, this one. Debtors control, 197. And there's your opening balances. Okay, you can all get those easy marks. 5 marks just for knowing what those accounts are. Right, assets have balances on the positive side. Liabilities have balances on the positive side. Okay, you just need to remember your rules. Okay, balances always go on the positive side. Always, always, always go on the positive side.
Does it happen with the PV and negative?
Well, if they said bank overdraft, then it's a liability, not an asset. But then it's still going to be on the positive side, but just for a liability, not an asset. Okay. The only time you'll have a negative balance is if you have a negative asset, like depreciation. Not depreciation. Depreciation is an expense. Accumulated depreciation will have a negative balance on the credit side. Okay. Right, so those are easy marks. Now we've looked at all of that. We can tick it, we can cross it out. I don't need to look at it again. I know I need to account for VAT. That's very important. Totals. Cash receipts journal. Analysis of receipts, I don't need that column. Bank, I do need that column. What is bank going to do to your bank account? Increases. It's cash receipts. Good. Total receipts, cash receipts journal. How much? 301,560. There's it there. Receipts increase your bank accounts. Next, sales. Did they ask for sales? Yes, they did. What sales are these? Cash sales. What's going to happen to your income? It's going to go up. Right, so in sales, you're going to record the cash sales. How much? 129. Happy? Good. VAT output, did they ask for it? No, they didn't. Okay, they didn't ask for VAT. They asked for sales, purchases, bank, debtors, and creditors. That's it. Don't need it then. Did they ask for debtors? Yes, they did. Okay, debtors in the cash receipts, what happens to the account? Up or down? Debtors in the cash receipts. No. Debtors in the cash receipts. Debtors goes down. What do debtors do? They pay you. When they pay you, your debtors are going to decrease. 154,500 will go on this side. $154,500. Got that? Great. Next, cash payments journal. Do I need the bank? Of course I do. They asked me for it. Total payments. Yes, you can all get your distinctions. It's possible. Just it's going to take some effort. You need to get through more past papers. Okay, the more past papers you do, the easier it gets. 211296. 211296. 211296. That's the right amount. Do I need purchases? They asked for it. Yes, they did. Purchases is going to go up or down. It's going to go up because I'm buying goods for cash. 86,400. Let's just write it in. Bank CPJ. Okay, there you go. Next, VAT input. Did they ask for it? No, they didn't. Creditors control. Did they ask for it? Yes, they did. So creditors control. What's happening to your liability in the cash payments journal? It's decreasing. Good. Creditors will decrease because I'm looking at my payments. Creditors, where's it? There's it. Decreasing on this side. How much? 112,800. 112,800. There we go. Okay, now we've looked at another journal. Okay, we've got lots of journals. Next one. Sales. What's happening to my sales? Going up. There's my sales. It's going up because I've sold on credit. So debtors control. Sales journal, right? Yes, they call it a sales journal, SJ. How much is the sale? 322,500. 322,500. Okay, there's the debtors control. So if this is the credit, where's the debit going to be, guys? There's the credit, where's the debit? Debtors control, good. So go to your debtors, get the other mark. Okay, you can't write in debits without credits. Okay, so just to recap, sales is an income. When you sell, income goes up, there's a credit. There's the credit because of your debtors buying from you. What happens to the debtors account? Debtors go up because they are going to owe you. They're going to owe you the amount that they purchased, okay, from you, i.e. the amount that you sold. Right, do I need the output VAT? Yes, I will, because output VAT is going to increase the debtors control. Good. Right, so debtors control needs to have VAT here. How much was the VAT? 45150. 45150, there's it. Okay, have a look at this, guys. If you add up those two amounts, what do you get? This plus that gives me 367650. There's 367650. Debtors control asset increasing. Why is the asset increasing? Because you've got sales and output VAT. Those are the two amounts making up the total. Okay, just something additional. Sales returns. What is this going to do to my debtors? It's going to decrease my debtors. Do you agree? Because the customers are returning. Happy with that? Great. So, debtors control, sales returns. From the sales returns journal. Output VAT would be reversed out. Okay, how much was the sales return? 73,500. 73,500. How much was the output VAT? 10,290. 10,290. Okay, notice again, if I add up those two amounts, have a look at this. This plus that. What do I get? I get 8379, which is the same as that. 8379, because your asset is decreasing. Why is the asset decreasing? It's because of my sales returns and the VAT that I'm reversing out. Okay, just to show you that additional working. Happy with that journal? Perfect. Next journal, purchasers journal. Purchasers will affect who? The creditors. Purchasers was asked for. Where's my purchasers account? There's my purchasers account. If I'm buying on credit, purchases will go up. 117,900. 117,900. 30th of the 9th. Creditors control. CJ. No, not CJ. PJ. Purchasers journal. That's what they called it. Okay, so here's my debit. Where am I going to put my credit? Debit the purchasers, credit the creditors. Okay, so there's the debit. Here's the credit. There's the credit. There's the debit. Purchases is going up because you're buying from your creditor. Liability going up. What date? Where? Oh, sorry. Yeah, I typed in 9 instead of 6. Thanks. Okay, output VAT. No, input VAT I don't need, but input VAT affects my creditor. Okay, because my creditor will have VAT when I buy. What was the VAT? 16,506. 16,506. Okay, again, something additional. Have a look at this, guys. If I sum up those two amounts, what do I get? I get 134406, which is this amount, because your liability is going up. Liability increasing because of your input VAT and your purchases. Okay. Purchase returns. What's going to happen to my creditors? It's going to decrease. Where do creditors decrease? On the debit side. Perfect. These are the returns from the purchase returns journal. The returns amounted to how much? 10,800. And the input VAT totaled 15, 12. There's it. There's the return. Okay, returns reduce your creditor's account. Okay, your liability decreases on the debit side. Okay, so the returns will be debited to your creditor's control account. Right, and then the last bit, general journal. Stationery, did they ask for stationery? Yes, they did. Stationery debited was 700. Stationery, where's stationery? No, they didn't ask for stationery, sorry. It's my mistake, I thought they did. VAT, they didn't ask for. Did they ask for creditors? Yes, they did. Okay, what's happening to my creditors? It's going up. Credit the creditors because of stationery and input VAT. Right, so go to your creditors. What date was this? They didn't give you a date, so I'm just going to use the last date of the month. Stationery from the general journal. Input VAT from the general journal. Okay, so credit, okay, the creditors with stationery and input VAT, 798. Right, from the general journal. Is that it? Yes, that's it. Now you need to balance these accounts off. Okay, so again, easy marks. Balancing the account. How do I balance the account? I total. Which side's bigger? We would assume that the credit side is bigger for creditors because it's a liability. Sum up those amounts, get that answer. This is the balancing figure. This amount minus all of these, subtract, 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 gives you that answer there. First of July, balance brought down. And that's how you do balancing. Okay, we've done balancing a lot when we did the bank recon. Okay, so here I need to balance the account. Alright, so let's leave that up and let's balance the next account. Okay, can I shrink this? Can you guys still see that? Okay. Sum up. Sum up. We can see this side is bigger. Want the same amount on both sides. Take that total, subtract the credits, all of them, gives you the balance brought down. Carry down, brought down. There you go. There's the balance for your debtors. Happy with those two counts? Yes or no? Yes, great. Awesome. Well done. Okay. Right, last accounts we just need to balance off. These accounts aren't so bad to balance because there's not that much. Okay, so if I balance this account, you could actually just total up. Okay, the total is actually your balance. Okay, if you want to show brought down, carry down. Same thing here. Sum up all of that. The total is actually your balance. Okay, and then the last one, bank, we do need to balance. Bank is special. Okay, sum up the debit side. I get that. I can see that's bigger than that. Okay, so that's going to be the total on both sides. Then I'm going to carry down a balance here, and the balance will be this minus that. Balance carried down, brought down. First of the next month, there's the balance. Save. Okay, now we've completed question number 1.
Just to ask,
Yes.
Are we just gonna, does the cash receipt and cash payment, are we always gonna leave it like that?
No, if they asked you for the VAT T accounts, then you'd have to draw them up. They didn't ask for the T accounts in this question, so I'm not going to draw it up. You only do questions that they ask you for, or let's say accounts that they ask you for. That account, that account, that account, that account, that account. You don't look at other accounts that aren't being asked for.
Yeah, but then when recording the sales,
When recording the sales,
yeah, in the cash receipt journals,
Yeah.
we left out VAT.
in the cash journals, because this amount is everything. Okay, the total payment. So for example, let me show you that. Okay, in the cash payments journal, what does your bank represent? The bank represents the amount that I pay, which is everything. Do you agree? When I pay someone for something, I paid in the VAT inclusive. Do you agree? So I've actually paid for what? All of that. Does that make sense? Okay, because when you pay everything. Right, you don't show I only pay. So for example, when you pay someone for something, do you say, well, I'm only going to pay you the VAT exclusive? You pay the VAT for me. No. Okay, when you pay everything. Right, so this amount is already VAT inclusive. Okay.
So when we see bank, we know it's already VAT inclusive.
Because bank here represents what you pay, which is everything. Makes sense? Great. Right, that's another question, guys. Question 1 complete. That took us 21 minutes. In the exam, you would have 30 minutes to do it.